Olá, sejam bem-vindos. Meu nome é Patrícia Couto, eu sou aluna de mestrado em Desenvolvimento Internacional Sustentável na Escola de Políticas Sociais na Brandeis University. Antes de iniciar a apresentação do painel, gostaria primeiro de agradecer o apoio dos nossos parceiros e ao Estadão pelo apoio e parceria em nossas transmissões. A apresentação de hoje faz parte do painel Desigualdade, que foi dividido em duas partes. A primeira, como a desigualdade agrária é impactada pela crise atual, com a discussão no contexto do Brasil entre os nossos convidados, que já está disponível aqui no canal. E a segunda parte, com a apresentação do nosso ilustre convidado Michael Kremer, que vai falar sobre Financial Pro-Social Innovation. Michael Kremer is the Gates Professor of Developing Societies in the Department of Economics at Harvard University. He's the joint winner of Economics Nobel Prize of 2019, alongside Esther Duflo and Abhijit Banerjee, for their experimental approaching of alleviating global poverty. Professor Kremer's work focuses on innovation, including education, health, water, finance, and agriculture in developing countries. An innovator and a social entrepreneur, Michael remains active in translating his academic work into programs that have impacted millions of lives around the world. Michael is a co-founder and serves as a scientific director of USAID's Development Innovation Ventures, and an open, tiered, evidence-based fund that supports innovation for development. Professor Kremer, welcome to the Brazil Conference, and please feel free to start at any time.
Obrigado. Thanks so much. So I'd like to talk about an issue which is a perennial issue, but I think also one that's particularly important at this time, which is how we can finance and support innovation that is directed towards social needs. Why innovation? Well, a number of reasons. First, innovation is really the key driver of long-run economic growth. And I'm thinking here of innovation very broadly. And partly this is new technologies, new software, but it's also new business models and even innovation in policy, innovation in government. And this is not only important for economic growth, but it's also very important for human welfare and in many other ways. If you look at health, for example, the health around the world prior to the COVID crisis, at least, was much, much better today, even in relatively low-income countries, compared to what it was in currently rich countries when they had equivalent income levels. So in Vietnam, for example, life expectancy today is well into the 70s. When the US had an income level comparable to Vietnam, the life expectancy was much lower. So it is possible, and health is really a dramatic example, for human beings to have much higher welfare, even at relatively modest income levels due to technological growth. Obviously, we want a technological change both for economic growth and for other aspects of welfare. But one issue is that often innovations, in particular certain types of innovation, are underfunded relative to social needs. So one area that I'm involved in and have been is using the experimental method to address poverty. You think about companies like Google or Facebook, they're using the experimental method every day, in fact, thousands of times every day, to try to optimize their web platforms, to design exactly the right font that's going to get the most clicks, and the precise wording of every web page. There's lots of experiments and lots of effort going in to innovate around that. But there are other things which are very important for human welfare as well, but are won't attract the type of investment from firms that that Google and Facebook are putting in right now. Now, partly there are things that firms can try to devote some of their effort through voluntary methods to supporting those. But I also think there's a role for society to try to stimulate that type of innovation. And what I'd like to talk about today is some ways that society can do that. So I'll discuss this two methods. One, which I'll call push funding, and the other is pull funding. And then talk about how these could be combined to try to create incentives for innovation to address the COVID-19 crisis. So by push funding, I mean traditional research funding or innovation funding, upfront funding that's given in advance of the innovation being ready. And I'll give an example that, as was discussed, is an area that I've worked on, which is a fund at U.S. Agency for International Development, which I helped establish and for which I serve as scientific director, called Development Innovation Ventures. Then I'll give an example of pull funding, and this is very different. This is where a group of funders, which could be governments, commit that if the private sector develops a solution, they will help purchase it. And I'll give the example of advanced market commitments for another disease called pneumococcus, which also causes pneumonia, just as COVID-19 does. Then I'll try to lay out some ideas on how these two approaches could be combined to tackle the COVID-19 crisis. So I wanted to acknowledge some co-authors who've worked together with me on this, on assessing the track record of innovation funding at Development Innovation Ventures. Sasha Gallant, Olga Rostopchova, and Milan Thomas. So, I mentioned the case for innovation before, but I mentioned that case in very abstract terms. And a lot of money is going into promoting innovation, and I think we have to ask, not just is it a good idea in theory, but is it a good idea in practice? Let me go into that in a bit more detail. There's many different programs to promote innovation in international development. So some of that is scientific R&D. The Bill and Melinda Gates Foundation has spent a lot on health to address the health challenges that particularly affect developing countries. There's a lot of agricultural research funding. So for example, CGIAR, that's an international network that was responsible for the Green Revolution seeds, which transformed agriculture in many parts of the world. I know this is an area where Brazil has been very successful in having a very strong system of promoting agricultural research and diffusion of that agricultural research to the farmers in Brazil, and that's made had huge economic impacts in Brazil. So that's one area, and perhaps that area is the most studied. Let me discuss two other areas. One is social science research, and I put the example of the World Bank, which has supported a considerable amount of social science research. Again, I'll just mention a couple of examples that I'm eager to visit Brazil sometime and to get involved in Brazil, but I haven't yet. But let me mention some other work that I'm aware of. So Fred Fanon has done some really outstanding work showing the impact of the audits that the national government in Brazil does to examine local governments, and shown that those are, one might be skeptical of those such programs, but he shows that in fact those auditing programs actually have very real effects. So that's another another type of research or innovation that there's been less work to try to understand the impact of that. One recent paper examined that was done in part by my colleague Gautam Rao at Harvard. He was one of the co-authors on this paper. Examined the impact of providing mayors in Brazil with information on social science findings on, for example, on ways to increase tax collection by communicating with taxpayers. And in fact, he found that providing this evidence did lead to increased adoption of this approach by mayors. So there's some evidence that social science research can make a difference, but these are really selected examples, and it would be nice to look at this more systematically. And so, as I'll explain, we've tried to do that. So then a third area of innovation is impact investing or social entrepreneurship. And this has been supported by a number of organizations around the world, including the Omidyar Network or the Skoll Foundation, and also by Development Innovation Ventures. So a natural question is, are all the funds going into this? Are they a good investment? And I gave you some anecdotes of success, but I could also give you some anecdotes of failure, often spectacular failures, in fact. So we wanted to try to analyze this systematically. And we looked at this initiative that I've been involved in called Development Innovation Ventures. And I'll explain a little bit about the approach that we used. The approach that we used, we applied this to Development Innovation Ventures, but I think a similar approach could be used for other portfolios. So for anybody else who's involved in funding innovation, they could look at this. They could use a similar approach for their portfolio. So let me give you a little bit of a background on Development Innovation Ventures. So Development Innovation Ventures had a structure that's a little bit different than many other innovation funders. We were not focused on just one area like agriculture or in just one geography. We did want this to be in either middle-income countries or low-income countries. But it was open across sectors. It was open across geographies within that category. It was also open across scaling approaches. We were both open to ideas that would be scaled commercially as an impact investing, or to ideas that would scale through adoption by governments. We had a very broad definition of innovation, similar to what I mentioned earlier. It wasn't just gadgets. It could be a whole range of things. So how do we complement that openness? Well, we needed some way of deciding, and we had an approach that was an approach of tiered funding with rules around each tier. And the rules very much came around evidence. So we gave small grants when we started up to 100,000, although that's been adjusted more recently, for piloting new ideas. That's before any formal testing. The second stage, which was up to $1 million, was for testing ideas. And that was rigorous testing, sometimes with randomized controlled trials of the type that are used in testing medicines, to really understand both the impact of the innovation and to really distinguish that from potential confounding factors, but also to assess cost effectiveness. And then the third stage, which could be substantially more than 1 million, was for transitioning ideas to scale. So let me tell you a little bit about the types of innovations that we funded. I'll look at our portfolio over our first 3 years, which was roughly 2010 to 2012. It takes time for innovations to scale, so that's why we're focusing on the early portfolio. We made 43 different awards to 41 innovations. Some of these look very much like social entrepreneurship programs. For example, a for-profit firm that was selling affordable eyeglasses. So this is sort of a social entrepreneur. Some of them were more technical, like developing an approach to hermetic storage of grain, or the postpartum hemorrhage tamponade. There was a sanitation business. This was a for-profit as well. There were some things that were reforms to elections that could be done, designed to reduce fraud. They could be done, that obviously would not be done commercially, but might be adopted by governments, for example. there was really a very wide range of sectors, a wide range of countries, and things intended to scale both commercially and through the public sector. These are other examples of innovations we supported. So what's our approach to trying to assess, is innovation a good investment? Well, it's very difficult. If you want to answer this question rigorously, if you want to measure the benefits, then you need, for every innovation, you need to calculate how many people were reached, what the benefits were per person, what the costs were per person, do a complex series of calculations to get the total benefits. That's actually very time-consuming, and even in the best case, but often it's almost impossible. For example, sometimes for conceptual reasons, for example, election, I mentioned one of the innovations that was designed to reduce election fraud. Even if you can measure the impact of that, how do you put a dollar value on the benefits? Seems very hard. Other things conceptually might be possible, but we might lack the data. So to try to make the problem a bit simpler, the first thing to notice is that innovations, any innovation funder, whether it's a private sector venture capital firm or a public funder like ours, investing in innovation is inherently risky. And there's a very skewed distribution of outcomes. If you're a venture capitalist, if you invest in Google, you've made a lot of money, even if a lot of your other investments aren't spectacular successes. And in our case, it was very similar. There were some innovations. So this shows the innovation of the reach of the innovation by 2018, the end of 2018. You'll see there were 9 innovations that went over 1 million users out of the full 43. And those accounted for the vast majority of the people reached. Now, of those 9, we were able to quantify the benefits in financial terms or monetary terms for 4 of them. And that those are the ones indicated in red. Those weren't necessarily the ones with the that reached the most people, but those were the ones we could quantify the benefits. So you might think, how are we going to answer this question of whether the benefits exceed the costs when we only have data on the benefits of 4? Let me show you the approach we use. First, we try to look at the benefits of these of those. I'll explain how we look at the benefits of each of the 4. And let me give you the example of one innovation, which was actually a social innovation. It wasn't a technology innovation. This was in Kenya. So in Kenya, there are many buses. They drive very unsafely. 2 researchers, one at Georgetown University, both at Georgetown University, James Habyarimana and Billy Jack, came up with the idea that maybe the passengers would actually like them to drive more safely, but they're afraid to speak up. And maybe they could stimulate them to speak up if they just put a sticker in the minibus encouraging the passengers to speak up if they felt the driver was driving unsafely. So they tried that. Stickers are cheap. This was a $200,000 investment. And what they found was they worked with the insurance company and they looked at the insurance claims and they found that they fell by 25%. So they wrote an article which came out in the Proceedings of the National Academy of Sciences, so a very prestigious, very rigorous journal. And following that finding, the approach was scaled up to reach 40,000 minibuses. This was so basically all of the minibuses in Kenya, the vast majority of them. This was done partly because the largest insurance company in Kenya made this a mandatory condition of coverage, and partly because the government of Kenya required this installation of the stickers when the minibuses have their annual licensing. The total benefits of this were very conservatively about $15 million. Well, because DIV only put in about 30% of the investment, we'll only count 30% of the benefits, so that's about $5 million in net benefits. That's, let me go on to another example. This is one that I was involved in. This is, so unsafe water is a major cause of diarrhea, and diarrhea is a major cause of child death. This is also in East Africa. There's many different randomized controlled trials showing that treating water with chlorine can reduce diarrhea. But there's quite low usage of water treatment solution. And the approach here was, instead of charging for water treatment solution, it's very cheap, about 30 US cents for a bottle that is enough to treat all of the water for a household for a month. But even that small price deters most households from buying. So only about 7% of people were buying the solution. And the idea here was to put a container of water treatment solution at the point where people are collecting their water, and then just to make it free. And it's partly financed through carbon credits. But partly philanthropically financed. So this approach is now reaching 2 million users. And the DIV investment share was 70%, and this generated 62 million in net benefits. If we look, I've given you two examples, but I mentioned there were 4 projects that we could get the benefits of. So here's the approach. Here's the approach that we use to answer the question of whether innovation is a good investment. And we just took the benefits of those 4 projects. And we didn't compare them to the costs of those 4 projects. We compared them to the cost of all 43 projects. So we're taking the benefits of a subset against the cost of the full portfolio. And what we see is that if we look at the benefits just through 2018, the benefits of those 4 projects were 5 times as big as the cost of the full portfolio. That corresponds to a social rate of return of 75%. And if you assume that the programs continue just at their same level and they don't grow, then that would be a 9-to-1 benefit cost ratio. And so these are very conservative numbers because they're excluding all of the innovations that reached less than 1 million users. They're excluding 5 of the 9 innovations that reached more than 1 million people. They're excluding all benefits to other people from reducing disease transmission. And they're excluding future benefits of these innovations. So I think one lesson we can take away from this is that there's indeed a very high rate of return to innovation. It's a fantastic investment, at least these investments. And one other thing we can take away from this is that somehow the existing private market is not generating all of the investment in these types of innovations that society needs. We can also look at some patterns of which innovations scaled. So if we look at this, we uncover some really interesting and somewhat surprising results. So first, our expectation was that the later stage awards would be much more likely to scale. By scale, I mean reach over 1 million users. And indeed, we saw this. If you look at our stage 1 awards, you'll see that only 17% of them went over 1 million users. The stage 2 awards, 25% of them did it. And stage 3, well, we only had 1 award, but that award went over 1 million users. So you might think, well, why make these pilot awards? Why not focus on things that are already more proven? Well, there's another way to look at the data, which is to look at how many people were reached for every dollar that was spent. Or equivalently, what was the expenditure per person reached? And there you get a very different picture. So if you look over at the far right column, you'll see that the cost per person reached was actually lowest for the early stage innovations. Yes, they were less likely to scale, but they were so much cheaper that they were also a good investment. I don't want to overplay that result. This is a very small sample. I wouldn't conclude that we shouldn't invest in more developed innovations, But I think the lesson from this is we shouldn't dismiss early stage innovations as unworthy of attention. There are also some unexpected results on which business models succeeded. So might be useful to start with that second column. One finding, which perhaps wasn't that surprising, was that the innovations which were most likely to scale were the ones that were the least expensive, that had a cost of under $3. You see that they were much, much more likely to scale than others. If you look on the far left, you'll see that a related finding, which is that innovations that had a business strategy that relied on direct-to-consumer sales were much less likely to scale than innovations that had other business strategies. For example, B2B or B2G strategies of selling to larger businesses or to governments. And I think that if you think about the logic there, it's pretty clear why. If you're trying to sell a very low-cost product, and if you're selling that directly to consumers, the customer acquisition costs will be immense. And that will make it very difficult to run a profitable business. I don't want to say it's impossible, but it's very difficult. And so I think one takeaway from this is that it's worth thinking about business to business and business to government strategies, as well as business to consumer strategies for social innovation. You'll see also, if you look at the final three columns, there was at least some tendency, although not necessarily statistically significant, that innovations were more likely to scale in large countries. There was no real difference between, at least no statistically significant difference between whether the innovation was for-profit, operated by a for-profit company or was nonprofit. Or whether a local partner was involved or not. Okay. Moving on to the next slide, you'll see one finding suggests that there was actually quite a role for researchers in this and for evidence. So studies that involved researchers were actually more likely to scale rather than not, which is somewhat at odds with the image of researchers as just operating from an ivory tower. I think there's been big changes in the field of development economics in the past 30 years, and I think there's much more of a practical orientation than there had been. You'll also see that studies that having evidence from a randomized controlled trial on the impact of the innovation was associated with much greater chance that the innovation spread in the real world. Okay. What accounts for these results? Well, one hypothesis is that the private sector invests on its own in cases where there's a privately profitable innovation investment. And that leaves an arbitrage opportunity for socially motivated investors where there's low private returns but high social returns. What would be innovations like that? Well, private sector investors will be looking for innovations where there's an advantage for the incumbent. Once a firm enters, they'll be able to create what Warren Buffett calls a moat behind them. From an investor in innovation who's socially motivated, if competition comes afterwards, that's actually desirable. Another example would be innovations that require a partner that has a proprietary complementary asset. Those may not be so attractive to private investors. Take the example of the stickers in the buses, in the minibuses. The researchers came up with this innovation. They weren't able to make money off of that because this was scaled up by the insurance company and by the government. And neither one of them, neither the insurance company nor the government, would have any reason to pay the researchers who developed this innovation for that large amount of money for that innovation. It's not something that can be patented. It's not something where you can launch a profitable business. But yet this nonetheless had very high returns. But that's a perfectly fine investment for an innovation investor that is run where the purpose is social benefit, something like development innovation ventures. Okay. Maybe I should go on to the next slide. I think this has some implications for how you run those funds, but let me just mention that development innovation ventures is actually open for business, and if you would like to apply, I'd encourage you to visit our website, which is up here. And the staff, and that includes me, are not able to provide feedback on individual ideas for procurement due to procurement rules, but because it has to be competed. But if you apply, it's actually a fairly short proposal, and once you get through the initial screening, if you do get through, and there are many more applications that could be successful, but if you do get through, then at that point you can have dialogue to shape your proposal further. So I'd encourage, if any of you are social innovators out there, I'd encourage you to apply. Let me mention, move on to the second approach for encouraging innovation, which is, unlike development innovation ventures, which funds innovation up front and pays for the inputs into innovation, another approach is to just announce in advance that whoever comes up with the successful innovation will be rewarded. And that can harness the energy of the private sector towards innovation for social needs. So let me give you an example. And this is the case of a disease called pneumococcus. So that was a major cause of child mortality. In the 2000s, that killed more than 700,000 children under 5 in developing countries each year. Now, there was a vaccine that was widely available in rich countries, but it didn't cover the strains that were common in developing countries. So together with others, proposed something called an advanced market commitment. The idea of an advanced market commitment, maybe I should go into the next slide here, is that is to both boost incentives for development of vaccines and to improve access. How do you do that? Well, 6 donors launched an advanced market commitment for pneumococcus. They committed $1.5 billion to top up the payments. So this was provided an additional incentive of $3.50 per dose for vaccine manufacturers to develop the vaccine and put in the capacity. But that was available to any firm that met the technical criteria for having an approved vaccine. But the firm also had to cap the long-run price at $3.50. And that was intended to ensure that there would be access to this in the long run. Okay. Moving on to the next slide. What was the outcome of this? Well, 3 different firms produced qualifying vaccines. 150 million children have been immunized so far, and vaccination rates in poor countries caught up with those in rich countries much faster than for comparable vaccines without an advanced market commitment, like rotavirus, for example. An estimated 700,000 people are alive today because of this, because of the pneumococcus vaccine. Okay, why don't we go into the next slide? So, the health challenge that the entire world is facing today is COVID-19. And so I wanted to say a few words at the end about how can we try to speed the development of a COVID-19 vaccine? Let me first note that this is something where speed is really essential. The world is losing $375 billion, as well as hundreds of thousands of lives every month that goes by without a vaccine. So the social value of a vaccine is immense. Now, producing a vaccine is not going to be easy. Most candidate vaccines fail. And if you take the historical data on the rate of success for early stage candidates, you would need to have 20 candidates to get a 90% chance of at least one succeeding. What does that mean? Well, it means that we need to start building capacity right away, rather than waiting until after a vaccine is tested and found to be approved. I think we need to build that in parallel. So the standard approach is a vaccine goes through testing, which would take at least 6 months, and only after the vaccine is tested do you start building the factory. Because the benefits of a vaccine are so large, it makes sense to do something that private firms on their own would never do, which is to start building the factories while the vaccine is still being tested, before the testing is complete. This is obviously taking a huge risk because it's possible the vaccine will be proved to be ineffective and the hundreds of millions of dollars that have been invested in capacity will be wasted. In this case, it's worth undertaking that risk because the other risk, the risk that we don't have a vaccine, is truly disastrous for the entire globe. The other one lesson is we need speed, but another is we need capacity. And again, there's going to be a gap between the private incentives and what society needs. If you think about an individual firm, they would build a very big factory. And I have no doubt that if a firm developed a vaccine, they would indeed build a very big factory. But if they built a very large factory, one that can serve hundreds of millions of people per year, but we have 7 billion people, almost 8 billion people in the world. 7 billion of them would need the vaccine. We can't afford to wait for all of those people to be vaccinated. So we need vaccines, we need factories larger than we've ever contemplated before. There'd be no interest for a private firm in developing a firm that could produce enough vaccine to immunize everybody in the world within a year. They could just build a smaller factory at much less cost, much less risk, and then just do the vaccine, sell the doses over 2 years, for example. But from the view of the disaster that's happening to our health and the world economy, it would be worth it to build a factory large enough to serve the entire world within a year. Why don't we go into the next slide? Okay, how to do this? Well, one approach would be for each country that has vaccine manufacturers to invest in their own firm. But if that happens, then each country is going to take the risk that the bet that they make is going to not succeed. You know, any one firm, any 2 firms, any 5 firms, you can't be confident that you'll have a vaccine. You really need 20 bets. And for 20 bets, you need to build 20 factories, each capable of making billions of doses per year. It's an immense investment. That's not something that one country can do on its own. But if countries join together, they could coordinate investment across a portfolio of different technology platforms and candidates. And then each country would have access to the vaccines that emerge. And if you did this together, you could put in enough capacity to serve the entire world. There's also other ways that you could speed this. There's ways that you could change our process for testing vaccines. So for example, you could allow what's called adaptive trials, where you could allow partial trial results to inform manufacturing capacity decisions instead of waiting for the very end of the trial before starting manufacturing. You could also consider challenge trials in which people volunteer to actually be exposed to the disease. And those are much more rapid than conventional trials. Obviously, a lot of ethical issues to think through, but I think it's worth considering given the need for the emergency that we're facing. What would be our proposal for how to structure contracts? Well, I think the idea would be to combine some elements of the push approach and the pull approach. In particular, countries or an international agency like the recently formed ACT Accelerator could sign contracts with firms to finance the manufacturing capacity in advance. And in exchange, the countries or the international body like the ACT Accelerator would get an option to purchase the vaccine as soon as it's ready. And that could even be specified that there'd be a premium price for an initial quantity, followed by a lower price for additional vaccines. And that could, you could also build in rewards for speed. You could put an expiry date, so if no vaccine's developed in 18 months, that premium price wouldn't have to be paid. But you could also make a guarantee that a certain minimum amount would be spent on the best vaccines, whichever they are, if the vaccines are developed. Now, it would be in each country's interest not to try to do this alone, because if they do it alone, they're taking the risk that their particular vaccines won't succeed, but to do this through multilateral agreements. While I believe that would actually be in the national interest of each country, it's not clear whether that's going to happen. And we may be in a world of vaccine nationalism where countries enter into bilateral contracts with firms. And that would be another way of doing this. I think it does, I don't think it would be as good, but I think it would be better than not investing in vaccines at all. Okay, go on to the next slide. Just to conclude, I think the key to finding solutions to global development challenges like COVID-19 is going to be innovation. Obviously, we should do everything we can to fight the epidemic until we have the vaccines or we have the therapeutics. But in the long run, we'll need a vaccine. How can we do that? Well, let me just note that in addition to the vaccines, we can try to stimulate the development of treatments, of diagnostics, or even of new policies that might allow us to move from blanket containment to smart containment, ways to have containment, but avoiding some of the worst consequences for this. When we go on. One approach is push funding to directly support research and development or even installation of capacity. Another approach is pull funding. I've argued that push funding can have a high return, but I think we also want to combine this with pull funding as well. Why don't we just let's show all the bullet points, because I think it's important to engage the private sector in this search. And really, if we have a commitment that we're going to help purchase vaccines or once they're available, that can harness the tremendous energy of the private sector towards social needs. Thank you very much.
Professor Kremer, on behalf of the Brazil conference team, thank you so much for your presentation and for accepting our invitation. E nós encerramos aqui a segunda parte do nosso painel de Desigualdade da Brasil Conference 2020.